Very choppy downtrend today. We were down 2 days in a row after our equity peak on Tuesday. The market is very contentious in realizing downtrends, and let's take a look at those. After we look at the results for the day, a 200K portfolio down 2,100, 50K portfolio down 525. On the week we were down. We were in the same place last Thursday, I believe, and Friday has been a good trading day for us. We'll see if that holds up. On the month, we were up. The 50K is 1/4 of the 200K, but it lags a little bit because we had extra slippage in those accounts on Tuesday's economic report. So just a contentious downtrend. Lots of liquidity biasing the market to the upside, and so when the market tries to go down, it keeps getting popped up. You don't always see that when the market. There are days when the market can go up smoothly. When the trend is up, it can go up smoothly, but when it goes down, it's just constantly mean reverting and just kind of curls up. And it's very hard to short this market still, even though the trend is down, even though we're in a bear market with the contentious liquidity trying to buy the dip. The Fed's balance sheet comes out today, and we'll take a look at that. Also, we've talked about the prop up price action yesterday. We had constant prop up from the previous day's close in the 24-hour session. This is just the day session. Constant prop up. We had this bounce right here, right into the close, that basically took the entire day's range in the last 30 minutes. They tried to do the same thing today when the noontime prop would not work. It traded through that. Then the 30 minutes before the close, same thing here, 30 minutes before the close, this prop works. And so that the later that prop gets in the day, the more likely we are in for a cycle where it sells into the close. And tomorrow's Friday. We could see that. The market is due for more downside, in my opinion. To watch what happened with this market on the inflation data, CPI on Tuesday, almost looks like a car. I had to go back to the 24-hour data. A car moving at 100 miles an hour and just stopping on a dime for it to not trade below yesterday's lows, from Tuesday, and then today it just barely broke those lows and bouncing back, and so a lot of momentum down. This was a this post Labor Day stuff is kind of it's contentious. It seems extra contentious to me ever since Labor Day. And sometimes this prop comes in, and then when that's taken back, there should be more follow through. Those lows shouldn't be so hard to take out once it's gone this far. But it's tricky to take out those lows, I guess, with all the extra liquidity. The mindset in the market is still every sell-off is another good point to buy at a lower price, and lots of liquidity coming in. So let's look back at the market internals. You can see the ticks were kind of even, back and forth sideways. It was interesting to see the advanced decline line open down here, minus 1,300, go all the way up here to, I guess, 650 area, and then come all the way down to minus 1,300. So a wild advanced decline line to go along with it. Apple was down today, 1.8%. I think it's down 12% this month or something. I was looking at a report on Apple, how Apple is down, and Apple tends to lead the way in the market. The VIX is at 26. Surprisingly, it's 26. I would think it would be higher. 12,000 seems to be a level in the S&P they want to support. 3,900 or 12,000 in the Nasdaq, 3,900 in the S&P seems to be the numbers they want to support. Those are psychological numbers. If value is much lower, they're just not going to stop at those levels because 3,900 and 12,000 are big numbers that the market psychologically sees as support. If value is much lower, it will slice through those numbers, and so we could see a gap down tomorrow after all of this prop and chop. We saw the what I was going to say earlier was we saw this rally at the end of the day yesterday, and the market came down here and rallied again, and then it did this rally right here, which hit a couple of our stops right there. So it's that pattern we talk about where it moves really slowly and then it surges. You can see that on a 1-minute chart. But this was a bit of a stop running move that hit some of our strategies. We would have been profitable otherwise on those. Let's look at the trades on the day. So here's where our stop was run. Tick reversal. It didn't get it there. Came back down, rallied up here, hit our stop, and then rolled over all the way to new lows. That happened yesterday. We were at equity peaks on Tuesday with these shorts, and then yesterday kind of a stop run right at the low. Short trade, kind of a stop run right at the high. Feels that way. Those are the most frustrating trades, is when your stop gets hit and it immediately reverses and goes back to where you started. And then you see trend overlap, took the long trade, stopped out. We had parabolic, or VTNQ, took a short trade here, stopped out on that same stop run right there. So these two strategies, had they not been stop run, just a little bit bigger stop, it would have been probably a profitable day for us. Parabolic VSD was up on the day, got the short trade, was profitable. Yesterday we had no Nasdaq strategies that were profitable. Today we only had 4 Nasdaq strategies that traded, and only 1 was profitable. So low winning percentage, 1 for 9 in the last 2 days in the very contentious, choppy, stop running type market environment. S&P, we had 2 strategies that traded today. Momentum reversal, try to reverse to the long side on the stop run, and then it was stopped out because the stop run wasn't legit. And then 60-minute breakout was long at the close, reversed to the short side. We actually were stopped out, got short again, stopped out. Let me expand this so we can see this a little better. I'm converting this to a 1-minute chart, and I've sent that update to some of you. And so yesterday, got long here, stopped out this morning, got short here, stopped out, and then got short again up here. So it's what happens is the market rallied, stopped us out, kept rallying all the way up here, and then it rolled over, and we got short again right about the same place where we stopped out. So I always like trades where we if we get stopped out on a short, if we can get back in at a price that's close to or better than our previous entry, that's always seems to be a nice setup versus getting short down here. But this hit a profit target, and then the market rallied and rolled over again. This hit a profit target. So the last 2 trades hit a profit target, even though the first 2 were stopped out. And up on the day just a little bit on 60-minute breakout short. So 1 for 2 in the S&P and 1 for 4 in the Nasdaq. Tomorrow's Friday. We tend to do well on Fridays. It'll be interesting to see what the market does on Friday with FOMC next week and how it's continuing to process the inflation data from Tuesday's CPI. Has not been much of a follow through in the sell-off. It's just been a contentious, slow, choppy sell-off. So those are the trades on the day as we go into Friday's trade for Thursday, September the 15th, 2022. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.